On this week's episode of the Business Diaries of Phuong and Jay, we'll be talking about starting a business in 2022, post-COVID, how getting into a large amount of debt actually helped me, and where should I invest my money, property or business? Cue music, Jerome.
We have the radio star right here with his loud voice.
Oh man, I aced that intro, right? I aced it.
Pretty good.
Well, guys, today we have a special guest joining us on the show. He is a residential and commercial finance broker who started his business mid-2022. Started working in financial services since he was 19. Prior to the GFC, been a mortgage broker for 8 years now, and now owns Lagos Financial. Welcome, Victor Lagos.
Thanks, guys.
How you doing, man?
I'm good.
Good
How you
intro.
doing?
Good intro.
Very good intro. I'm spot on, actually.
Mate, I must be on my A game today. I did not mess it up once.
No,
Usually I mess up a
impressive.
couple of takes
Yeah.
and all that. But yeah, man. Welcome. So from my understanding, this is your first podcast?
It is. Actually, no, sorry. I have been on a podcast before.
Oh, yeah?
Yes, yeah.
Ah.
A buyer's agent interviewed me. It wasn't quite as structured as this.
Mhm.
There was a big camera in my face,
Yep.
and I had a lapel.
Okay.
And it was recorded and it was up on YouTube.
All right. Well, that's cool.
But this one's cool. I like this structure better.
Man, we try to put out all the big guns for you, mate. Usually it's not like this, man. But today, just because you're on the show, we're like, why not? Why not?
Thanks, guys.
Yeah.
But anyways.
Need to make it look good for people, right?
Yeah.
Yeah.
Victor, I know I just introduced you just now, but you want to give us a little bit intro about yourself, about your business, a little plug, shameless plug?
Sure. Yeah, look, I only just started in July this year. Lagos Financial. My name is Victor Lagos. I've obviously just taken my name. I really just want it to be a representation of me. At the end of the day, like, you have a business name, but the branding should represent the person that you are. I'm the face of the business. I am going to grow it. But that's kind of the basis of it. But look, I'm residential and commercial. A lot of residential mortgage brokers don't know how to do commercial. I do. I spent the last couple of years learning it. I got my diploma in commercial lending. I joined the Commercial Asset Finance Brokers Association, so I've got that plus the Finance Brokers Association, so two of them. I got a lot of professional development. I joined another mentoring course, so I really put myself out there to understand commercial lending, so I can help business owners, right? Consumer lending, car loans, and mortgages is usually just for mum and dads, and
Yep.
But I like how you said that with so much conviction. It's like, yeah, I do it too.
Well, he
Yeah.
works with another guest that we've, I guess, done a podcast for before and shot for him too, Steve Palisi. Pretty big commercial buyers agents in Australia, I guess. From my understanding, you do a lot of business with him too. So if you're listening to this podcast and you're looking to get a loan for a commercial property, Victor's your guy.
Thanks.
But yeah, let's get straight into it, Phil.
Yeah, man. So I just wanted to understand a little bit about your business. Like, what was it like getting away from the 9 to 5 and whatnot?
Yeah, so I've actually been, as you mentioned, Jay said I've been a broker for about 8 years.
Yeah.
I initially started my broking business. Sorry, when I first started as a broker, I was working for a company. So I was PAYG plus I was able to earn commission. And that was for about 7-8 months in 2014, working for a property group. And then I started my own business on my own in 2016. So I already had that exposure to what it is like to do it on my own.
So was it in conjunction with the PAYG business?
At the time, no, I went all in, but I borrowed money to start it off. So I took a startup business loan from ANZ Bank, and I had no idea what I was doing. I winged it. I invested into courses. I wanted someone to just tell me what to do. And I learned a lot, but I spent a lot. And what I didn't realize at the time is that the most important thing is to have clients coming through the door.
What do you mean? What do you mean? That is the bread and butter of business.
I think that would help, mate.
I know. You'd think that, right?
What were you thinking at the time?
I had a really nice website,
Yeah.
right? I
But what were you
filmed professional videos.
What were you thinking if you didn't need clients?
Look, it's not that I didn't think I needed clients. I just thought that if I had a nice brand out there, that clients would come to me.
Right.
it's not the case.
It does help though, but like at the end of the day, I reckon that the business relationship between like the client and
Yeah.
yourself would help, right?
Well, that's what I did this time around. I flipped it. I don't even have a website yet.
Right. So you went
Interesting.
customer client first, and then the stuff comes
Exactly.
after. Okay.
Correct.
That's
Yeah.
fine.
And also I'm self-funding this time, whereas previously I funded it from a bank loan.
Right.
And the
Right.
problem is that because you have to pay interest and you have to pay it back.
Yeah.
But I didn't have the revenue to pay it back.
Right.
So then I was like, okay, what do I do? So I had
See,
to,
that's
I mean, sorry, before you go, like I do like one thing that you did correctly though, that I think is a great way to start off a business is to invest in yourself. So
Yep.
the way that the thing that you did by getting a lot of courses, mentorships, and all that stuff is great. Tell me a little bit about that.
So there's a company called the Entourage. A guy named Jack DeLosa started that business. Still going to this day. I signed up for a program there, and I was around entrepreneurs and business owners, and it was really great. I learned a lot about the fundamentals, about creating a sales funnel or a marketing funnel. But they teach you what you need to do, but not how to do it. And the how-to is always the most difficult piece, because if you're not technical minded, if you don't have the time to invest, if you're already busy trying to do everything else and you're trying to learn a new skill, and then especially not in your exact field, like, because obviously my field is finance, right, and broking. I don't know how to build sales funnels online and do Facebook marketing, but I learned what needed to be done. So then fast forward, I ended up shutting that business down and I joined another mortgage broking business. I worked there for 4.5 years. In the last 12 months of working with them, I actually started running Facebook ads under my own brand, Victor Lagos Commercial Finance Broker. So it wasn't a conflict of interest. I wasn't trying to set up a separate brand. It was just me, right? I was representing me. Put myself out there. It's like a real estate agent, right? They might work for Ray White or whatever, but it's their name, their brand, their face that goes out to the world.
Weren't you doing the same thing with as in like you were still doing mortgage broking, right?
Correct, but commercial. So the mortgage broker I was working was only residential.
Oh, okay.
And I sort of said, you know what, I want to actually start learning commercial. And I asked them for support. So my plan was to partner with them and say, look, instead of me being a employee, and you mentioned PAYG, I sat down with the boss and I said, look, I know things have been going well, and you want to, you said to me, give me a pay rise. I said, I don't want your pay rise. I don't want the pay rise. What I prefer is a bigger chunk of commission for the deals that I bring in, so that I can invest in growing this commercial arm. Because I know that you need to put your money where your mouth is.
Correct. Because if you don't do the work, you don't get paid.
That's
and
right.
That's it. But look, you touched upon two important things that I believe you definitely need being an entrepreneur or owning your own business, right? The number one is earlier you spoke about you touched up on financial acumen. So basically your knowledge of finance and understanding that without finance or without proper control of your finances in your business, you're going to be spending more than you make.
Yep.
And number two is it's like knowing that business in general, all the different attributes of a good business owner are is that like business in general is a skill, right? It's not like you said yourself, you came from a finance background, you didn't know the business side of things, and you had to learn all that. And I do think that's something that a lot of people don't understand, is that they think they're just going to open a business and that's it, right? They're going to be successful because they're an expert in what they do. It's not the case. Business owning or starting up your own business, understanding the system, understanding where to find knowledge, all the how-tos stuff, that's a skill in its own, right? So you got to be pretty savvy with where you find information, how you implement that into your business.
Yep.
Correct.
Correct.
But yeah,
I think what people usually tend to think when they've worked for many years in a particular field, they've done the job, they're really good at it, right? And they believe that because they know the work, they can go out on their own and open a business and be very successful at it. But unfortunately, like Jay said, there's another skill set that you need to learn to be able to grow that business.
It's funny you say that, because that's the thing that I identified. So when I realized that I want to be a commercial broker, my background was always residential. I said, what do I need to do? What skills do I need to acquire? And one of those was I need to learn commercial lending.
Correct.
Right? So I invested into a course. Well, actually, I asked my previous employer; they paid for it, but I invested the time.
Does that classify as conflict of interest?
No, because I was bringing the business in to their brand,
right.
and we
To
were
get paid.
splitting the commission.
Yeah.
So they were getting paid, right?
Okay.
But that wasn't my predominant role. That was kind of secondary. My predominant role was to serve their clients. That's what I was getting paid a salary for. But the commission that I was earning from my own deals, whether residential or commercial, I would reinvest that into marketing. So that was the second skill I needed to acquire, which was the skill of customer acquisition. Right, that's marketing and sales. Right, so then those two worked hand in hand.
Yeah.
Right, learn how to do commercial lending, and learn how to market and sell.
out of curiosity, what do you think is the number one skill set a entrepreneur or a striving business owner has to have?
Mindset. Mindset by far. Yeah.
Really?
Yeah, because if you don't have the right mindset, it's very easy to get overwhelmed.
By mindset, what do you mean?
So things are challenging. When you start a business, you have to wear every single hat and you have to chop and change regularly. And if you don't have the right attitude, then it's very easy to be overwhelmed, give up, and not bring your best self when you talk to your customers or your other stakeholders. Or
You know what's funny though? Like the mindset thing, it's such a cliche though. Like people don't get it. Like people who haven't gone through it think, oh, mindset.
It's usually classified woo-woo kind of thing, but yeah.
Well, it depends on what angle you look at it.
Yeah.
But I get it. Like there's a book called Mindset, which talks about a fixed mindset versus a growth mindset. And in simple terms, fixed means you're stuck in your ways.
Yep.
And growth means you're looking at different ways outside the box.
For me, I'd enter that a little bit different, considering what the attribute or skill set I find that it's most would help you in terms of being most successful as possible is definitely sales for me. My sales and marketing, obviously, because I do believe that sales in general is the lifeblood of any business, right? If you're not able to bring in any new clients, like you said earlier, you weren't focused on. Or you didn't understand that you had to bring business earlier.
I think there's a balance there, man. Like
Really?
I wouldn't say like sales is the foremost most important things. It is one of the top what's called attribute of a business, but you obviously need the people behind it to do the work as well. So
Correct, yeah.
Sales is to bring the business, but if you're selling something and there's not a substance behind it, it's kind of hard to for people to believe.
Oh no, I get that, but I'm just saying, and I think that's why a lot of companies in general value their sales team so much.
Yeah,
is because without them, there's no business coming in, and without no business coming, there's no business in general.
But see, I think there's people out there that are big visionaries.
Correct. Yeah.
Entrepreneur at heart, but they're not actually good salespeople.
Yeah.
And I think what they do is they identify who's a good salespeople.
Correct.
And they bring them into the team.
Right. And that touches up on like what you've always say, like without the business itself, it relies on the team. It's not just like for you, you're a one-man band at the moment.
I've got one support staff at the moment.
And in terms of scaling or growing the business, what's the next recruit you're looking at? Another salesperson or?
Not yet. Yeah.
Can I rephrase that question in another way though? Like it's to me, listening to the story that you've actually told us up until now, I get the sense that you're very self-aware.
You are,
right?
yeah. That's true.
So you understand your strength and your weakness. So just piggybacking on Jay's question, what sort of weaknesses do you have at the moment that you want to fill in for your business?
Yeah, that's a good question. So marketing is definitely something that I'm not abreast to what's going on.
Yep.
I know it's an ever-changing environment, whether it's Google or Facebook, LinkedIn, podcasts, books,
Radio
blogs.
show, you mean?
Yeah.
Radio show.
And rather than hiring someone up front, saying you want to be my full-time marketing manager, pay him a salary and get him to do everything, I think it's important to work with businesses like you guys because you can outsource a lot of it and you just do this day in, day out. You're not trying to do everything for everyone in marketing, right? So, and that's something that
there's pros and cons. Like I'm not trying to say that we're not efficient or successful in driving traffic to your business, but I think there's a pros and cons in terms of saying in-house versus agency, which is better. We've had this conversation with another marketing expert too, and he says that in terms of in-house, what you get is more, I guess, dedication to the business, considering that's all they do day in, day out. They invested in just that business, right? Opposed to other agencies, you've got them focusing on 5-6 other accounts as well. So it really depends on where what you value more and what works for you more, really, right?
I truly believe that the jury is still out in this particular aspect in a way. So
yeah.
I mean, if you
depends on the size of the business and how long they've been around. Like I'm just a startup, right?
Yeah.
So for me to invest a lot of money in hiring a full-timer based in Australia, that's going to eat into a lot of my cash flow.
100%.
Correct.
Yeah. Pros and cons of everything, I guess, right?
Yeah.
So look, and one more question before we move on to the next topic is mindset, man. What did you have any mind blocks or roadblocks coming into your business? One that we find that a lot of entrepreneurs or startups have is that they say, everyone's doing it, so it won't work, or the market's saturated with that service, so I won't do it. Is that something you went through?
I get it. I mean, in my field, specifically the mortgage broking side, there's about 18,000 brokers.
Oh, too many.
It's a lot.
around Australia, is it?
Around Australia,
Wow.
yeah. And anyone you talk to probably has dealt with a mortgage broker before.
Yeah.
So how do you compete with that? And so I get it for someone entering the industry now. What's your point of difference, right?
What about the number of lenders that are out there for mortgage brokers to look into?
Oh yeah, there's a lot. I've got like 30 just on residential, another maybe 20 for commercial.
So there's enough to go around. Is that what you're saying?
Oh yeah, there's plenty of lenders. There's abundance of money out there that from lenders that are willing to lend the money to people. But you got to understand their policies, their appetite, like in terms of what type of customers they want to acquire. Their niches they call it. So it's hard to juggle that. Then that's just the technical aspect, right? And then we talked about getting the customers. If you're new to industry, you have to go out and find customers. How do you find them? And you have to tell them and demonstrate to them that they're a better broker than the guy they've spoke to before. And if you're new, how do you compete with that? For me, I've got a point of difference. I've been in the industry since I was 19. I'm 35 now, nearly 36. I've worked inside the financial institutions, worked for a big bank. I used to approve home loans. So I was the one saying yes or no. So now I know what to present to banks because I just present what I used to want to be presented to.
Correct. Yeah.
Right?
Do you find it harder when being a new business that your branding's not totally out there? Do you find it hard to get clients at the moment, or is it?
To be honest, I'm quite blessed because before I started the business, as I mentioned to you guys earlier, I was running Facebook ads. That's how I reached out and connected with Steve Polisi, the buyer's agent. He saw my ads and it's like, I like what you're doing.
Damn.
And then he's like my number one referral partner now.
Yeah.
Also, I left on good terms with my previous employer because I helped them grow their business and we learned a lot from each other. We helped each other a lot. And they're my number two referral partner. So they refer me all the commercial clients.
Right, and then you just pay them a referral fee or whatever.
Correct, yeah.
And that's the things a lot of people don't realize too. Is
Relationship.
That, yeah, man, just your networking is so important as a business in general because joint ventures partners are real. That's a real thing, right? They give you a lot of business. If you're partnering up with people who lack a certain aspect in their business to drive the sale across, for example, a buyer's agency and a mortgage broker, right? They complement each other really well. So you really got to find those networks where they'd be giving you most of the work. So that means you don't have to work so hard to find leads, right? Because they're feeding you some leads at the same time as you doing it, obviously.
Yeah, exactly.
And for us, similar to you with your buyer's agency for a mortgage broker, we've got marketing partners who feed us leads for production because that's what we focus on, right?
Yeah, perfect.
Yeah,
I'm interested because you say you're still in great contact with your previous employer.
Yeah.
And that was basically in the last 9 to 5, right?
Yeah, correct.
So I think this is a question that people don't really dwell upon. It's like, how did you transition from that to your own business? And how did you maintain that relationship?
Yeah.
So in other words, like, how did you quit?
Yeah, well, it started when I planted the seed, like I mentioned, where I said, I don't want the pay rise.
Yeah.
I want to get a higher commission and I want to invest in this and I want to partner with you guys in the future
Yep.
and grow the commercial arm of the residential business. So you guys do residential, I'll do the commercial. And they said yes. So that was a good win for me. So that's the trajectory that I was on.
And there was no hesitation. He was like, okay, I'm not going to pay you higher, but I'm going to get
Well,
more.
I mean, they recognized that I was, bringing,
Ambitious,
I was ambitious and I was
Yeah.
actually helping their business quite a lot. And I had that ability and I was driven. Right?
Yep.
But what happened was we were leading towards that agreement and it just kind of made more sense to do it on my own because they were already getting quite a lot of momentum doing what they were doing. And if I then sort of latched on and said, I'm going to do the commercial side, then I needed to have support. But the support they had was built around their residential business, not around commercial.
Right.
So it was like, well, rather than, I guess, sharing the profits and then having to then reinvest that to grow my business within their business, let's do it on my own, right? And that took a bit of courage, right? Because
I can imagine the feeling that you must have when you gone up to your boss, like, hey, I'm doing this on my own now. Like,
they were upset, actually. They were upset because, they invested that time and obviously they paid for my course and they were like, we thought you wanted to work with us. And I was like, well,
you do.
I do.
You still.
And then that's the thing. Because we established that relationship and that trust, they said, well, why don't we just keep working with you for the commercial deals, like the original agreement, right? But I can still have my own business, which I do. And every time they have a commercial inquiry, it comes to me.
So nothing's changed.
Not really. Well, yeah. I mean,
Well,
I don't go to their
yeah.
team meetings anymore. I'm not under their brand.
No, but then in terms of the client flow and everything, nothing's changed. They're still getting their commission. You're still getting your commission.
Yeah.
And then nothing's changed.
Well, what's a win-win for them is that when they send me a referral, it's not like a regular referral where I present as Lagos Financial. I operate under their brand.
It's a white label.
Kind of like white label.
Yeah.
So I've still got access to my old emails.
Yeah.
So,
Correct.
You know,
Yeah.
I
That's
represent
But again,
their
like I
brand.
said, man, joint venture partners is so important
Yeah.
in any industry. Like
I feel like people are a lot more open about it. Like
Correct.
businesses are a lot more open about like creating relationships
Yeah.
as opposed to burning bridges and competing with each other instead. You know.
Yeah, exactly.
Yeah.
And there's a lot of business out there. Like it's a $2 trillion industry in residential.
Yeah.
And then there's more in the commercial as well.
Yeah. Yeah.
You know, so
Yeah.
$2 trillion.
yeah, it's big. It's
Wow.
big money.
Yeah, and freaking property is a big industry.
Wow.
Man.
Even if you get 1% of that, that'd be great.
I think residential property is about 10 trillion.
Hmm.
Wow, dude, that's insane.
All right. I guess this we'll be moving on to the next topic. Is this one you wanted to hit up, Phuong?
Yes. So I did read that you had a bit of a personal run-in with debts. Right.
Yeah.
So how did you become someone who is in debt to now someone giving out debts?
Yeah. It's funny. It's true. I do give out debts. I make money from selling debt, essentially.
Oh,
well, I sell
Jesus.
customers to debt providers, right?
Yeah.
Because that's what at the end of the day, I've got to present customers to say, why is this a person that this bank or this lender should give money to?
Yeah.
So I got to sell them, and then ultimately, I love it because it's a win-win-win scenario. Right?
Yeah.
They want the debt, they've got an objective, and they don't care about the debt. They want the objective, whether it's property,
Yeah.
or to buy a business or whatnot.
That's true. They want the objective and not the,
Yeah.
the actual debt. They don't really think about the debt first.
It's always about the solution, man.
Right.
Not about the process. Always the solution.
Yeah.
So I have a tagline, and that tagline is, I will teach you what the banks won't, and that's how you can benefit from debt and not lose from it.
Yeah.
Right? And that's come from my own experiences. And to answer your question, Phuong, when I was 18, when I was working full time at Coles at the time, and went to St. George Bank, and they gave me, $18,000. No, sorry, $12,000 straight off the bat. No questions asked. Personal loan. I used it to buy a car, my second car actually. And first car I bought cash was $1,000.
Oh,
And,
18 and making dumb decisions already. I love
yeah,
it.
yeah. But even before that, to share a personal story, like my mum is actually Filipino background, and a lot of Filipinos have got issues with credit card debt, and it's not because they're bad with money. It's because they always intend to pay back later, right? So they'll look after their family, and they have the intention to pay back, and that's fine. But credit cards allow you to spend more than you earn, and that's where you end up in a trap. And if you can't pay back your debt, your credit cards, and clear it in full, then you carry that over, and then you have to pay interest on that. And then if you're paying the minimum, you're paying interest on interest. So the compounding effect works against you. That's why laws changed, and at the bottom of credit card statements, it actually says if you pay the minimum, it will take you 20 years to pay up. Wow. It actually says the estimated term. That's new. It never used to say that, because you just say, I've got a bill, $150. All right, I'll pay it. But if you just pay that and you're paying, say, 20% interest rate or more, it'll take you 15, 20 years.
20% interest rates.
Credit cards are expensive, man.
Oh, yeah, that's right.
Yeah.
Yeah. So I'm thinking about loans. Yeah, you're right. Yeah, cool, fair enough.
So, and I just, I got into the finance game when I was 19, and then so my income went up, and then I was able to get more credit cards because,
Why not?
banks are happy to give you credit cards. And I don't know, it was weird because I kind of had this feeling like it was a bit of like a trophy. So I had like 5 credit cards. I'm like, yeah, look at this. Yeah, But I was intelligent too. Like I was never late on payments. And I used to do what's called balance transfers. So I would actually like get one card to pay out the other to pay less interest.
But doesn't that incur interest on itself? Because that's basically called a cash advance.
No, not for balance transfers.
But balance transfer is
Really?
like, I think that's when, correct me if I'm wrong, that's when banks want you to basically take your business to take on your debt so that they can get the interest from you, right? So that's why they allow you to do
It's like a
balance transfer.
refinance or a debt consolidation.
Yeah.
Is that still a thing? Like, can you still do that?
Yeah, you can still do it. So
Like-
say you've got 20 grand owing on your credit card, and you're paying 20% interest rate because you weren't able to clear the balance because it's too much. Right? 20 grand, you can clear that in one hit. So then instead of paying it off in like say 20 years by paying the minimum, you go to another credit card provider and they offer you say a 0% or a 2% interest rate for a balance transfer. So then you apply for a $20,000 credit card, and they then pay out that other card directly. So the debt moves from that institution to this one. The problem with that, and this is what my mum used to do, and it happened to me as well, is they pay it out, but they can't enforce you closing that card. So you're like, awesome, I've got a better interest rate, I've got 20 grand owing here, and now I have 20 grand available here. So then you then spend on that card. So now you got 40 grand worth of debt, right?
Guys,
that's how easy it is to fall into this trap.
I just want to reinstate that this is not financial advice.
Yeah.
Yes, yeah.
So
It's a good disclaimer.
let's go back to the story with your.
Well, these are rough numbers, but
Yeah.
I didn't have 40 grand, I wasn't silly where I just allowed it to get to that point. But I did use cards to cover off expenses, and I wasn't able to clear them. So I was carrying a lot of personal debt for many years, and the way out of that is to really, be honest with yourself, and look at it and say how much income do I have, how much do I spend, and what's left, and then you have to whatever's left, you need to pay the debt back and stick to that. So then at one point I even had a second job I was working at Macquarie Bank at the time. Wait, was Macquarie? No, sorry, it was a different institution, but I was also working at Bunnings. And what I actually did was I had a personal loan, and personal loans have their own BSB and account number. So I actually told payroll to pay the personal loan directly. So every hour that I put into that second job, it went straight into the loan.
Oh, smart.
So it didn't even allow me to spend it on anything else.
Oh, you can do that?
Of course you can, yeah.
Oh, wow. Okay.
Well, it's my name, right? It's just a BSB and account number. To them, it's just an account, but it's an actual loan.
It's after tax, right?
Yeah.
Okay.
That's
Yeah.
enough, yeah. That's interesting.
So you gotta be disciplined, and then the other thing you can do is if you've got other accounts that you're using, say for savings or debt, to pay back debt, you can tell payroll to pay multiple accounts. Not all payroll will do that, but some for bigger banks or institutions, they'll pay you 500 there, 300 there, 1,000 there, and they'll do it for you. So that way you don't have, the temptation to spend it on something else.
That's like how I usually give the money to my wife, and I don't deal with it.
Or just don't get into debt in general.
Yeah.
And then you won't have to worry about it.
Getting debt is too easy. That's the problem. And unless you've got the right mechanisms that you've put in place, the right structures, and even just the right mindset, it's very easy to fall into this debt trap.
So you're 18, 5 credit cards, and a personal loan. That's quite a lot of debts for someone who's 18 years old, just got into the workforce and whatnot. How long did it take you to get rid of all of the debts?
Well, I had a window when I was debt free when I was probably about 25-ish. So I managed to clear it all, pay it off, second job and everything I said. But, old habits die hard.
Yep.
I went and got a new car.
Again.
Yeah. I got a new car, I got a car loan, and then, look, and then I told you guys when I started my own business, that was in 2016, I got a startup business loan, which was an overdraft. And I don't really understand, at the time I didn't know what an overdraft was. I just thought it was a loan. But overdrafts aren't designed to carry. They're not like a term loan. You don't hold them for a long period of time. They're designed short-term only. So that put me into trouble because I didn't have the revenue or the clients to pay it back. So instead of rushing and trying to find customers, because customers don't want to come to you if you're desperate, right?
Yeah,
they can sense it, right? So and I wasn't really that confident with what I was doing, but in terms of the business, because I was a startup, etc. So what I did was I sold my investment property because I owned a property at the time that my parents helped me buy. It wasn't the greatest investment. There was no thought process behind buying it. It was purely because it was in the same suburb that our family home was. So it was just, move and relocate, right? And my parents were my first tenants there. And sold that, and I cleared the debt. And I paid back. I had a credit card as well, a business credit card, which I had maxed out.
Oh my God.
I know.
Oh my God.
As I said, old habits die hard. What changed for me was actually my wife. So we met in 2016, and she's very good with money. So she'd never had a credit card before. She'd never had any debt, and she just was good at saving. Whereas I was the opposite, right? And I was open with her, and I told her about my debt, and she went red in the face. Like, she was thinking, like, what have I done? I'm married with this guy. Yeah, and I'm like, well, yeah. So we obviously got to figure this out. And
it's an honest relationship, which is good, man. I commend you for that.
Thank you. Well, that's what I think is one of the issues that a lot of people have, is they're not open and honest about their finances with their partners. And if you're not, then it's always difficult to achieve financial goals because you're on different pages. and you're keeping secrets, because a lot of people keep secrets with how they spend money. So by putting it all out on the table, we were able to look at it for what it was and come up with a plan. And the plan helped that I sold the property, because I was able to get rid of that debt. And then that's when I joined my last employer. So and that was a commission only role. So when I first started, I wasn't PAYG. So I was already sales, like you mentioned before, getting that skill. I was basically calling people that were online leads. And so coming from a debt background and needing to clear all that, and having debt, I even had capital gains tax that I need to pay from selling that property. So I had more debt, tax debt. I was panicking.
Well, you thought you'd probably clear your debt by selling a property, but you actually incurred more debt.
I incurred more debt because I had spent the profits already on the business, which I started up. So I should have kept money aside for the taxes. So anyways.
And that's something people don't really do most of the time. They see money come and say, oh, great, I got all this money. I'm going to spend it. They don't see like the tax aspect of it usually.
Well, that's the thing that changed for me, not just the tax, but it's understanding how much do you need to spend. Because see, bank accounts will track how much you spent in the past, but they'll never tell you how much you need to have in the account. And that's what you need to be aware of. So it's like, say you got payday today, $1,000, and you're like, awesome, I got $1,000 available. But next week you got electricity bill, a phone bill, and the rego's due. So really that $1,000 is probably like $200 max.
Or negative $100.
Or negative, yeah.
Yep.
But then you go and spend that $1,000, and then you're like, oh crap, I actually forgot I needed to pay that.
Yeah.
So now where do I get it? Credit card.
Yeah.
You see? So anyways, so I don't go too long, I'll just say what changed for me. I then started the concept, and this is what really flipped. It's when you spend on credit cards, you're stealing from your future self.
Yeah.
All right. When you save,
powerful.
You're giving to your future self.
Powerful.
Love it.
Powerful.
So basically, I flipped that and said, I want to now give to my future self. I don't want to steal from my future self, because if you buy something on credit card today, you get instant gratification. Feels great for the moment, but it passes very quickly.
Yeah.
And then your future self's like, oh, thanks, past self. Now I got to pay this back.
Yeah.
Right? You got to feel that great feeling. Now I got to pay this shit back.
What a dick.
What a dick, right? But if you save, you put money aside progressively. It feels good while you're doing it. And then in the future, when you need to buy something and you've already got the money put aside for it, it's like, thanks, past self, you looked after me.
Yeah.
And then you get to carry that good feeling in the future, because there's no debt.
Guilt-free, right?
Guilt-free.
Yeah.
Exactly.
Guys, I just want to tie everything back into the whole overarching goal of this podcast, which is business in general. Yeah. So Victor, the topic was how getting into a large amount of debt actually helped me. Can you tell us about how, I guess, your past experience with debt has helped you run your business so far?
Yeah, so now I didn't borrow any money. So I launched the business purely off the back of receiving revenue from my clients.
Yep.
Right? And I also started to look at money that's coming through the door.
Yep.
Before I make expense decisions to spend money.
Yep.
So I don't look at it from, okay, I've got debt, and then I'll be able to earn the money to pay it back later. Now I look, okay, how much guaranteed income do I actually have? And then if I'm going to put it on the credit card, the card's going to be cleared.
Yeah.
Right? Because the revenue will come in the month after. So,
okay.
you know what I mean? So in my industry, it's a little bit different than if I win a customer, I don't just invoice and get paid straight away. The banks pay me, right? The lenders pay me because I introduce them business. And if I settle a loan, say today, I don't get paid until the end of the next month. So
that's tough.
It is tough, yeah.
And especially with like clawbacks too and all that.
Well, clawbacks is what makes things really difficult, and that's why good marketing helps you to stay in touch with your customers.
Could you explain to me what clawbacks is?
So not many people know this, but say you're my customer and I worked months to help you, and you're happy. I did the deal. The bank pays me a commission. If you then decide, say 3 months later, Victor hasn't been in contact with me. I want to buy another property, and Joe Blogg's broker is in contact with me. He wants to now help me buy another property. He then does a loan for you, but he refinances the loan I set up for you, Victor set up.
Right.
The bank says, all right, well, this loan was paid out in full only after a few months, and anything between when it first started and 2 years, that commission that I earn has to be paid back to them in full.
Damn, it's tough.
So all of it?
All of it, yeah. 12 months, it's all of it. Second year, it's like a 50% reduction. But
So
wow.
So basically, all that work you did was
for
for nothing.
Exactly.
So
And it's a very good chance I would have spent that money too, right? Depending on the time.
That's true,
frame.
yeah.
So that then affects my other clients too, because I've made revenue from other customers that I now need to use to pay back the bank.
that's pretty cutthroat. So it basically incentivizes you to keep in constant contact with them to refinance their loan every year, or how does it work?
Well, even if I finance it myself, I still got to pay clawback anyway. So it kind of makes sense for you to stay with that bank for at least 2 years before you change
so
banks.
you pay clawback on yourself as well?
Yeah, I mean, of course,
okay.
I'd get commission on the new
Yeah,
deal anyway.
yeah.
So but it's like I'm doing double the work for the same amount of money.
That's interesting.
But it's still better than if you went to another broker, right?
Yeah.
Because at least you're staying with me and the revenue stays with me,
Sure.
as opposed to me paying back and I lose you as a customer, right?
So you basically need to try to find the best deal possible for your clients.
wow.
Yeah.
Regardless of what, like even now with all interest rates rising,
Yeah.
you need to constantly be working, like communicating with your clients, your already closed clients,
Exactly.
to try to get the best deal for them still.
Yeah. Well, the good thing is I can contact their existing banks a lot of the time and ask for a reduction on interest rate if their repayments have been on time, if I compare with other. Because I don't know if you guys know this, but banks have got two forms of pricing. They've got front book and back book. Front book is new customers. So they'll give you, discounts and nice interest rates to win your business. Back book is existing customers. And they call it a loyalty tax. So actually, the more loyal you are, the higher the interest rate you pay. So you're like, I've been paying all my payments on time. I've been loyal to you as a bank, but you're charging me a higher interest rate than you are to new customers.
But why would they do that? Wouldn't it be better for them to keep the old customers?
You would think that, yeah. Well,
That's just like business 101, like
Yeah.
keeping current customer happy so they keep paying you.
well, in Australia, it's something that I think it's unique to Australia. Banks don't do this overseas. It's something they do here, but to an extent, I can't really complain, because if I do, then it means that there's a lot of customers I can't help out there. Because if all the banks
Right.
are constantly dropping their rates,
Yep.
there's no opportunity for me to refinance anyone, because they're always on the same rate as anyone. Does that make sense?
Just before we close up on just this section, I want to ask you, majority of your business, is it new loans or is it refinances?
No, a bit of both.
Bit of both,
So
50-50?
so one thing that changed for me starting this business compared to the first time round is I've got multiple marketing channels. Like, I don't just stick to one. I've got 9 referral partners now. Right. When I started, I had 2, which is my previous employer and that buyer's agent we talked about, and now I've got like 6 more. And,
Yeah, that's pretty good in the
7
span
more.
of like
4
4
months.
Yeah.
Jesus.
So
Yeah.
you've been really active in like
Very
networking,
much.
right?
A lot of networking. Yeah, I
Yeah.
joined a networking organization. So I go and I set up calls and we have coffees, or we have, 1-to-1 or one-on-one Zooms, and I really just talk and get to know them, understand their business. But the key thing is to give first. So I always look for
100%.
providing referrals to others.
Yep.
And then the law of reciprocation kicks in. That's
Yeah.
why my business tagline is giving is receiving.
Yeah.
Wow.
So the more I give, the more I receive. The
That's
more I
a lesson.
receive, the more I give. So anyways,
I think that's sorry, just before I let you go on there, I think that's the tagline. That's the title for this podcast, Jerome.
Giving is receiving.
Giving is receiving.
Give
It
to
really-
grow.
Give to grow, yeah.
Yeah.
But there's more to that. Giving is receiving is not just I'm going to receive later, because I give and then of course I know that I'm receiving at the same time.
Okay.
But it's also, if you think about it, when you do something good for someone, the best part of it is when they get something good out of it.
Yep.
If they say, thank you, you really, really helped me. That is the best feeling that you get, as opposed to, I just got paid, right? It feels good to get paid.
It's a hard mentality for consumers to actually understand, right? That particular tagline you just said there.
Yeah,
Is
it is.
it's sort of counterintuitive. Like to receive a thank you, but what can I do with that?
What can I do with that? Exactly.
Yeah.
It gives you energy.
Of course.
right? But anyways, just to finalize on the question. Wait, what was the question again? Say it again.
Giving is receiving.
No, before that.
Tagline.
How to get
The leads.
Yes.
Oh, yes.
You talked about the leads, right? So when I do different multiple marketing channels, I've got Facebook ads, which are for refinances, right? I've got referral partners that are purely commercial. I've got other referral partners that's residential. So it's an array of different types of customers, because I can do all of them.
Yeah.
So I don't. When you said if it's just refinance or purchases, it's a bit of everything.
Wow. Okay. Cool.
So maybe niching down all the time may not be the solution.
That's interesting.
Well,
That goes counterintuitive to what I've been thinking about. Like as a company, you should be niching down to one particular product, for example, right?
Yeah.
Whereas you have like 9 channels for 9 different things.
Well, some of them are the same things, right?
Yeah.
It's just about knowing who's for my referral partners, what type of customers do they have that I can serve?
Okay.
Because they
Fair
may
enough.
not do residential customers, so why am I promoting residential to them, right? They may not do commercial, so why am I talking about residential to them?
Right.
So
fair
guys,
enough.
we're getting waved down by our producer Jerome, but so we got to move this along. So
Sure. No, that's fine.
sorry to
Go
cut you
for it.
off there, but so the next topic, guys, this is probably a one for those who have a business, I guess, and have been doing pretty well and has
Lightning round.
and have
Let's go.
a little bit more capital to play around with. The question goes, where should I invest my money, in property or business? Victor, what's your thought on this one?
Well, for me,
Obviously, with you, you're in property, of course, you'd say
Yeah.
property, but just give us some insights.
well, for me, I invested in the business first. So basically I put money into marketing. It was about $60,000 that I put into lead generation and marketing. A lot of that didn't work, didn't pan out. So it was gone, but at least it was my money. It wasn't borrowed money. Then when I started my business, I was sitting on a whole bunch of savings and I thought about it. I'm like, do I keep that aside and put it into my business, or do I invest it into a second property? And I thought about how would I feel on the other end of it. On the one hand, I've got all this cash, but I've got one property. The other hand, I got 2 properties, no cash, but I've still got a business. I thought that feels better to me.
Okay.
Right.
It depends, I guess, depends where you're at in your life, and if you think that if the business needs an injection of cash and to gain more leads, again, more businesses, or do you want to diversify and buy property so that you can have 2 streams of income?
I call that risk mitigation here. Like this is a form of risk mitigation, because if you buy the house, that means you have like a hard asset there in case anything happens with your business.
Yep.
I mean, business you can start with like literally $0 these days, right?
Yeah.
Really?
Yeah. If you don't have money, use your time.
I guess.
You know what I mean?
I guess.
So-
Yeah, no, it's true.
Yeah.
Well, that's, for me, it was like exactly that. I'd known I'd done it in the past. I'd sold a property and that got me out of debt. So I know that worst case scenario, if the business fails, I'll have some equity in the property, so I'll have access to cash
Yep.
while I, get my feet off the ground to
You're
find
right.
a new job.
So-
So
risk mitigation,
what's,
you're right.
yeah. So what's the verdict then? Business or property?
Depends.
If you had to choose one right now.
I don't think it's a hard yes or no or this one or that
Depends
one.
on the
where you are.
circumstances.
Yeah, okay.
It depends
Where
where you
you
are in
are.
life.
Yeah, but also that gave me a push to be putting myself out there to get new clients straight away, because I didn't have capital to invest in the business. It was purely off the back of revenue from past customers.
Correct.
So it's like it puts pressure on you, but that's sometimes what you need. If I was sitting on say 60 grand of cash that I could have invested into websites and whatnot,
Yeah.
then I may have been complacent in terms of putting myself out there. So
Gotta stay hungry. Gotta
yeah,
stay
you gotta stay
hungry.
hungry. So that worked for me. For other people that may not, and they might end up frozen and be like,
What to do with it?
yeah,
with
or what do
cash,
I do with it, or
Yeah. Well, actually, I was in this I guess predicament not too long ago. I had some cash from the previous business I sold, and I was like, what do I do with it? And to be honest, I ended up building another business. But yeah, I mean, it really depends on where you are with your life and what you want to do with your money.
There's a great saying I just want to share with you guys. I heard this recently, and I say this quite a lot. And there's 2 real ways to create a small fortune in life. One is to spend less than you earn and invest the difference. And the second one is to provide something of value that other people are willing to pay for. So why not do both?
Why not do both? True.
Yeah.
Diversify.
Yeah.
And with that,
We end the podcast. Now, guys, if you enjoyed that episode, actually, no, sorry. I hope you actually did get a lot of value from that episode. If you do have any mortgage or financial questions, Victor Lagos is your guy. Victor, I just want to quickly thank you for coming on to the show. And yeah, look forward to working with you more in the future, man.
Awesome. Thanks
mate,
for
I
having
really
me. Guys.
appreciate the insight that you have. Thank you so much, man.
No worries, man.
Awesome.
Thank you so much.
Cue music.